Good morning. My name is Bob Gersh with iReverse Home Loans. Over the last 6 months, we've been doing a weekly radio show on 104.9 FM in Massachusetts. It's coming out of Beverly, Mass. And once a week, we spend a half hour talking about various senior issues on the radio. We've also taken that same radio show and put it on our website and other places so people could listen to it at your convenience anytime. During the summer, we're going to be taking a break and switching up a little bit and changing the way we do things. And what we're going to be doing is, rather than the weekly radio show, we're going to be doing a weekly, it could be once or twice a week, but we'll post it weekly, blog, as you're looking at right now, which will be a video blog. And that way we can answer any questions. So if you have any questions regarding any senior issues, if I don't have the answer, I can get the answer and report back to you. And or any items relating to a reverse mortgage, I can certainly be able to respond to that. And we can put that on future weekly video blogs. So today, what we wanted to do is to talk about the appraisal. And last video session, we did talk about what happens prior to doing an appraisal to make sure your property meets the minimum conditions to qualify. And those are usually health and safety type issues. And if you want to look at the last video blog, it will go into a number of those items. So what we want to do is continue on, and once you feel the house is in good condition for the appraiser to come, and you invite the appraiser in, he or she goes through the house, interior and exterior, takes a number of pictures, is going to look and observe for any issues that may be a health or safety issue, but also observe the general condition and take measurements, etc. The appraiser will then come back, usually it's a week later, and have a full report, which you have a right to a copy of. And in that report, it's going to give a lot of information regarding the property itself, comparable properties in the surrounding neighborhood, the community, and go into various calculations for the value. There are a lot of other documents within that appraisal. Some are disclosure type items, legally required. Others are general information. But it's good to read it over and to understand how the appraiser came up with the value. Now, once you looked at that, there'll be maybe a reaction that you're happy with it, maybe surprised at the value, good or bad. If you find that you're not happy with the value, then a suggestion is take a good look at the how it was done, and it may be that that's the reality of what's going on in your neighborhood, in your community at this time based on values. At that point, you have a number. That number can be then brought back to us, your loan origination advisors, and be able to crunch the numbers to determine, based on reverse mortgage calculations, based on your age and now the assessed value for the property, based on that appraisal, how much you can receive under the various scenarios that you are looking at. Now, they may be different than what you initially were looking at because the value may be somewhat different. But we can rerun the numbers just so you'll know exactly what to expect, since there'll be more final numbers now that we have an appraisal value set. Once you have that, you're going to see, does the transaction work? Now, there are really, I would say, multiple choices as to where you go from here. Clearly, you're in the driver's seat. Some things are just what can be offered. Some things are your choice of what you want to do. But what it comes down to, if you decide to proceed, you're really going to have two primary choices. One is a regular reverse mortgage insured by the FHA, and one is what they call the Saver program. Again, it's an FHA insured mortgage, and the difference is that the Saver program has significantly lower upfront FHA fees, but at the same time gives you less money. You can translate it to higher fees. The government's taking a little more risk, they'll give you more money. They give you less money, they're taking less risk, they'll lower fees. So you have, at that point, once you know the actual value, a choice between the two. And in all cases, no matter how you start out the application, you could change to one to the other. But once you start that process, then that's what we'll use for the closing. So you will make a decision. Do you want the Saver program or the regular program? And you should call me, 781-202-7475, or email us if you want more details regarding the differences of those programs, and we can run specific numbers and show you how those calculations work. Again, not every program is for everybody, different programs for different people, and therefore you want to, based on the value, determine where you want to go. The other alternative is that you decide that the value is not adequate because of the amount of your mortgage or your other requirements to do the transaction currently. In which case, what we're suggesting is that we set up a program where we look at the current value, which the appraiser will, with some other reports we can run to also give supporting information to that value, run the calculations to know how much you could get from a reverse mortgage if you're short funds, because the amount you could get is less than you need to pay off existing mortgage or to meet your requirements. One of the options is that we run a report. We then put the application status on hold, and that we put it on the calendar, and every 3 months, every quarter, we rerun this report that we can do, and we take that report, compare it to the prior quarter, and compare them. Again, it is a way to be able to utilize information on an ongoing basis to see the trend. We'll report that initial information to you and then follow up every quarter with subsequent reports. Based on that information, you're able to then see the trend, see the values, and see at what point in time potentially there is adequate values based on, again, the amount of your requirements, the amount of your existing mortgage. If that goes down, that may help the situation. We all get older, and that's unfortunate. At the same time, the positive thing is the older you are, the more you can get out of a reverse mortgage. So your mortgage current value balance may be going down, your age is going up, and hopefully if the value from quarter to quarter has gone up, at a certain point you can pull the trigger and say, okay, the numbers are working for me, let's continue on with this transaction, in which case we get together again, potentially because the time period has gone by, re-sign new applications and start the process again. But at that point we know, it's working, so you can pretty much put it on your schedule the way you want to work it. The other alternative is you find that there's not enough money to make it work, and with your other resources you find there's a gap, it's just not going to work. Well, what we're suggesting is you may want to look at a program of determining what is that gap, how much are you short, work with, and again, we don't do it, but we refer you to other professionals that do it, work with insurance and other financial advisors, estate planning people, and put some kind of insurance policy, like maybe a term policy, but again, that's up to those professionals and yourself. But just as an example, put a low-cost insurance on both spouses, in which case when something were to happen with one of the spouses, the insurance policy would kick in, provide adequate funds so that the surviving spouse, based on their age, with these insurance proceeds, would have adequate funds and the gap would have been filled to do that reverse mortgage. So that way, if something happens to one of the borrowers, the other borrower doesn't have a mortgage monthly payment to make as long as they choose to live in the home. They're able to, at that point, be able to pay down part of the mortgage with that insurance policy and or other assets to pay it down with, and then to be able to take that new balance and be able to convert it into a new reverse mortgage and no payments to be made as long as you're living in the home. So that way, it may not work today, but at least you know your spouse will not have to suffer financially and make the payment. And if there's only one member of the family left, possibly there were 2 Social Security payments coming in each month, and now there's only one. Other payments, pensions or others, may stop, and therefore you're short cash coming in, worse than you were before, but you get all that money going out. Now, if you can get rid of that mortgage payment on a monthly basis, makes life a lot easier. So our suggestion is we can put this in place. So even if when we do the appraisal, we find that it's not working, it may not be working today, but doesn't mean we can't put a plan in place, and with that plan in place, at a certain point in the future, something were to happen to one of the two borrowers, the other borrower would be all set. So this is a way to be able to fill that gap, and we've used it for a number of estate planning type purposes like this, and certainly by giving us a call we can go into more details how it might work for you. So that's what would happen as an alternative. So it's not a case once you get the appraisal that unless you choose to, that nothing can be done. It's a case of there are options which can be done. Some are for planning for the future and put a plan in place, and then it's in place and you can rest assured. It doesn't help with the cash flows today, but it certainly puts you in a position for the future, and that may be, you know, a good alternative to look at. So that's it for today, and again, have a good weekend. It's Friday here in the office in Woburn, Massachusetts, and hopefully it's a nice weekend coming up. We just had a great 4th of July, middle of the week, and so it's been a short week, and we look forward to seeing you next week. And you can go on to our website and go to where our radio shows are, and you're also going to, at the same time, going to see these shows. They're also going to be on YouTube, and we're going to put them on Facebook. So, you know, take a look at it. Feel free to communicate with us by email, by phone, however works for you, as far as any questions for information which we can put on future shows. Thank you, and have a good day, and have a good weekend.